Okay, so when I go about looking for entering trades on the NASDAQ futures or maybe even the ES or gold, any particular future contract that I may be interested in trading, there's one particular thing I must always see before I enter. And it makes the difference of one trade being a high probability versus another being a low probability. And I'm going to go over that because I think a lot of people kind of get confused and they're looking for entries or taking entries on setups that are not marked as high probability setups altogether. We want to have both high probability on our our higher time frame and lower time frame chart when it comes to the strategy that I discuss so much in depth and in great detail here on the channel. Now, I'm going to say this like I always do. For those that are really trying to figure out how to trade, not say what to trade, but really trying to find the direction of which way to trade, I should say, you want to master market structure. I know people always ask me where to start at. Start there. That is going to be the cornerstone to everything that you need to know to get you started. Definitely getting you started in understanding how to read the market and understanding should I be going long or going short. Okay, then you got to fold in your strategy, but which is going to help you identify, these setups to take. But structure is what's really going to overall let you know which direction or help you form a bias of the direction you need to take your trades in. So let's go ahead and get into today's video. I just wanted to put that out there because people always ask, especially those that are beginners, and I know we have those that are first-time viewers here to the channel and maybe looking for opportunity to, find a way to start trading something in the future markets. Market structure is what you need to master. That concept is extremely, extremely important. The beauty behind trading and the complexity of trading will only get greater and be harder if you do not understand how to read the market correctly. Trust me, I struggled with that for many years, and that's the reason why I'm saying that the picture becomes clear when you are able to understand what's going on. All right, and then sometimes you may not completely try to figure out or can figure out which way to actually trade. Like yesterday, and the last 2 days, really, pretty much, we were coming off this high and we made this low here and we started moving lower. I mentioned in yesterday's video, wait it out, because if we're moving sideways where we're in a wedge on the market, then you may want to wait to see if we're going to take out a high or take out a low and break structure, as we did in today's trading session. In today's trading session, even overnight, we were setting it up where we made this low, lower high, and then breaking lower, breaking below this low right here. So we broke structure lower, and that was a low that I was looking to be taken out if it was coming lower, making this low, making a run to the downside. Now we have an area sitting up here, which is a supply area that I marked up and I was talking about today. So, and then, this was an entry to the downside right here, which was a demand zone resting down here, high probability. I'm going to say this right now. What makes a setup and one in which I'm looking for surrounding the strategy of supply and demand, high probability. I've got to see the imbalance or gap resting back at a zone. All right, that's what I'm talking about. And now this is a counter trend setup in regards to structure of the market. So because we were making highs here, or higher highs, higher lows, bullish to the upside, and then we started making these lower lows and lower highs to the downside. So the structure is folded to the downside, but it tapped into, eventually tapping into February 13th, this demand zone resting over here. Now, it is a high probability demand zone because if I pull this box down, always keep in mind when you mark your zones up, where is, say, for example, an imbalance resting back at the zone. So once you created the zone, right, you mark up your zone and you know where the upper portion of the zone should be, and the lower portion of the zone should be. So you just take a look to say, okay, this is my upper portion of my zone where we're lay out at, okay, start at. And so that's where you're going to mark up your first area of where your imbalance is going to rest at, okay? And this candle right here, this bullish candle, is what took or closed out that last down bearish candle when it made a run up, pull back, bearish candle here, broke up. This candle here took out that bearish candle as it moved higher, okay? So, and this is the beginning portion of our demand zone. The next candle, which breaks above this bullish candle here, is going to set the tone to let you really know, is there an imbalance or gap resting back at the zone? There's a very small imbalance coming back to, or right back at the zone, because there's a gap on this candle that needs to be filled. I know that's not, 100% straight. Try to make it as straight as possible. But that's the imbalance of void that's left over from the top end of our demand zone to the bottom end of this candle right here, okay? This candle right here. Why this candle here? Because you're looking for the first candle that took out that bearish candle, which was this candle. Then the next candle, what candle took out this candle here, was this candle here. How far back did it pull, including the wick? Right here. So it left an imbalance in the market right there. That is what makes up the difference of a trade or a zone being high probability versus low probability. Please, 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 please understand that, okay? And that's what I'm looking for, because when the market came back here, this was a beautiful setup to take on a counter trend trade going back to the upside. And, even though we're taking some time to get back up, way back up here to around 22,170, 170 area, which is a supply area, this is a high probability counter trend demand zone. And if you guys have been following the channel, you already know the next step in what I do. Once I mark up the zone and identify that it's high probability, then I'll move down to the lower base chart, my 24 range chart, to find that last missing piece of the puzzle, which is the 24 range lower base or lower time frame chart demand zone that's sitting on the inside of this zone, okay, somewhere over here. So all that gives me is confluence, double confluence, higher base chart confluence, lower base chart confluence, with the imbalance just as well, okay? So and not just that, but it's even more confluence at this level in particular, because what we have a half number, 21,950. So trading is all about building up confluence to give you confirmation, to give you the signal to get into a trade. But again, you've got to have zones that are high probability. Those are going to be the ones that are going to work out 9 times out of 10 in your favor, okay? I'm not going to say every single one of them are going to hold, because we don't control the markets, and it could be news time, it breaks through it. Whatever may take place, we don't control the market as retail traders. So we can only trade based on probability of confluence. And that's why I stress the strategy in which I use discussing multi-chart confluence. So this is how I make money on a daily basis, just scalping for 1 or 2 trades. I always talk about, if you profit on the day, and if you made your goal, whatever it may be, in points or money-wise, then go ahead and close up and shut your computer down and be done for the day. Nothing wrong with maybe going in, if you want to switch back to demo and simulation, and then, getting some more practice in. But if you made your money for the day, okay, all right, and don't take any additional risk is what I'm trying to say, okay? That's the thing when people start making mistakes and the greed steps in to where they say, oh, this is a great setup too, let me take it. Yeah, it may be. But you got to also understand at some point the market may be in its phase where it's trying to reverse and move back to the opposite direction, if you get what I'm saying. Like right now, we tap off this demand area, okay? We expect it to push back up, but for how far, we don't know. Right now, we're bearish, okay? We are making lower lows and lower highs. We made a structure break to the downside, taking out structure over here. So overall, we're bearish, and we haven't really taken out any more structure back to the upside. Well, other than pushing up, pulling back, pushing up, pulling, as we retrace back, but we haven't taken out any structure to the left-hand side of the chart, moving back to the upside. Now, if we come back up here and we start taking out like above this high, then okay, that's going to be the first structural break where the market is now taking out buyers on the way back up. Excuse me, not buyers, sellers. People were selling right here, okay? The market sold off, okay? If it comes back up here and starts taking out structure to the left, then that's going to be a telltale sign that, okay, it's following that pattern that I always talk about. High, higher low, not taking out a low, making a new high to the upside, and taking out structure over here. Trend reversal, okay? All right, so I'm just going to show you another quick example of imbalance resting back at the zone very quick. I'm sure some of you probably took this trade here where the market pushed up, it pulled back, we got these little swings here to the upside, broke slightly above this area here of structure, okay? Pulls back, and there is a, this is a demand zone resting right here. But it's not a high probability zone. Why is it not a high probability zone? Because the fact is that this candle here, when it pulled back, it closed in the gap back at the zone. Okay, now there is a small a gap resting on the inside, but I like to take my trades if there is a high probability. Excuse me, I like to take my trades if the trade is high probability or the zone is high probability if there's an imbalance resting back at the zone. Sometimes there'll be like multiple candles, say for example in the zone, like this one here. So we can mark up the zone right here. I'll show you right quick. Right here, this right here. So when the market made this first candle to the upside, this candle here took out this candle here. The next one came back and closed back to the zone right here, right? And that's the opportunity which I'm looking for as far as there being an imbalance from the top in here and the bottom end of this candle right here. But there is a imbalance that's resting on this candle here on the inside of the zone, or on the inside of the zone. And sometimes they'll pull back and they'll test that area. But a lot of times what you'll see is they'll push up, come right back to the zone and take off. Okay. So I like to look at what I classify as an imbalance resting back at the zone. And then, like I said, sometimes they will come down and fill that gap on the inside where on a candle where there may be a gap on a candle on the inside of the actual zone. Sometimes they will, sometimes they won't. Sometimes they'll just tap the zone and take off. So that's the reason why I trade on the imbalance resting back at the zone. And then look for the rejection to go long. This case here, they pull back, but this was a low probability zone for me. Can you still take this trade? Sure. Even though it's a low probability setup, I'll talk about this in videos. Low probability setup where it comes back and maybe pushing further into the zone. Okay. There may be a high probability lower base zone on the 24 range. I talk about that all the time. Even though this may be low probability right here where it came back to the zone, by the time it came back to the zone, there could still be a high probability setup on the lower base chart to take a trade from. Still gives you that confluence to take a trade. The best trades work out where you have high probability, higher time frame, imbalance resting at the zone, just as well as the lower base chart having a high probability setup where there's an imbalance resting at the zone. So we have, both high probability setup where we got the higher base and lower base. That is the really, what marks a solid trade. Okay. But in this case right here, this was still a valid zone, even though it was low probability. There was a even though it was low probability, there was a lower base chart, high probability zone resting within. Okay. So either way, that was an example of a low probability setup on the higher base chart. Okay. This candle here came back to the zone. The wick of it came back and filled the imbalance resting back at the zone. Now, the zone resting above us right here, this is a high probability trade right here. We got a very, very small gap. Probably not gonna be able to see it too much, but it's at the bottom end of this candle right here. Okay, I'll mark it right here. Very small gap. It's gonna be hard to see this, but it's only a couple ticks right here, and in between you got a space there. Very small gap. Okay, this candle right here. Okay, this candle here came down and broke the bottom end of that bullish candle. It's opposite of when we were looking to go short. This candle here took out this candle right here. When it pulled back on the wick, it didn't come back to the zone all the way, which is that top candle right there. Okay, or the back end candle if you want to look at it that way. Didn't come back there. So it's an imbalance resting back there. I would suspect that if it gets back here, gotta follow price action. When it gets back there, it's going to react at that zone. Why? Because this is a breaker structure. It broke some structure coming down with it to the downside. So breaking structure coming down to the downside is a good sign where and definitely where it has it's a high probability zone. You can expect something to take place when it gets back to that zone right there. But this is what I wanted to talk about today was the imbalance resting back at the zone, how to really identify it and let you know that it's critical. It's very important piece to the strategy and how I trade. Okay. Now maybe you trade differently. That's fine. I always say what works for others. Continue doing so as long as you're profitable doing it. All right. And making money on the day. But again, that piece of the puzzle there, which is part of the strategy and how I trade, and anyone that's interested in understanding more so or getting more in-depth information surrounding the strategy, again, all it is multi-chart confluence, marking up high probability zones on both a lower and higher base chart and waiting for the retracement and rejection added. Okay, so I talk about that here on the channel in lots and lots of videos. Anyone that wants to dig even deeper and understand the breakdown of trades that I actually take, these are trades that I post and place over on our Discord community on a daily basis. Pretty much I go back and I break them down to those individuals that are the elite channel supporters. It's a private community, very inexpensive for anyone that's interested in joining. It's only $6.99 a month. But that's where you get the trade breakdowns, and there's tons of those videos on there already that you can watch. But that's where I go into detail about where to place your stop loss, where to place your profit target, in reference to talking about structure, why I took that trade, just the overall interest in letting you know so that you can grasp an understanding why I took that trade, and look for setups like that on your very own. So you get the trade breakdowns, the video playlist, plus the great video that I cover on market structure. And then, if I post other or more informational or educational content, I'll post it over on that channel. Not channel, I should say channel, that community as well. So the link to that is right down in the description portion of the video. Again, all it is $6.99 a month for anyone that's interested. Okay, very inexpensive. But if you're interested in joining the Discord, it's free. The link is right down below as well. It's the first link sitting above the Elite Channel Supporter link. Okay, but that's all I have, guys. All I want to share today was just talk about the imbalance and how critical and how important it is to really be able to identify and locate those small gaps in the market back at the zone, and to let you know how important they are as a role when it comes to the strategy as a whole. Okay. Outside of that, take care. See everyone in the next trading video. If you have not subscribed already, okay, I would definitely recommend subscribing. Make sure to click the sub button down below if you haven't. Turn your post notifications on so you don't miss any of the uploaded content. And if you found value in today's video, please make sure to drop a thumbs up. Click that like button for me. Take care. See everyone in the next one.